It was a volatile end of the week last week, and honestly, entirely the whole week. It was very volatile. But we made it very clear. We're sticking to the script. We are listening to the fundamentals, and we're following reality, not what people are saying, not, other things. We're looking at the facts, the data, reality, and history. We are making our decisions only on that. We are not focusing on the noise, and we're getting rewarded today, big time, not just in the markets, but particularly in our individual positions. So this is why we do what we do. Stick to the script. What led to volatility last week? Is it just, we're at such high levels and we're going to sell off? No. It was a combination of two things. It was the Fed talking and doing basically nothing, but still scaring people. And market dynamic quad witching of intense option expiry. I still personally have yet to get my full head around the quad witching notion. All I know is 100% of the time when there's a quad witching, the market is down. So that guaranteed down combined with the Fed, volatile week. Just noise. Stick to reality. But what are our interpretations about the Fed? How is Billy thinking about the Fed? I had a very different immediate reaction than everyone else as soon as the Fed happened. A lot of people thought that the Fed had their hands on the wheel of inflation. And all of a sudden, the Fed's in the driver's seat. You heard Jim Cramer talking about how Jerome Powell is the Superman who's gotten everything right, and commodities have peaked. I think that is definitely not the case. I don't think the Fed has their hands on the wheel. Now, I'm not trying to say they've lost control, but they said it themselves. Jerome Powell said it himself. He doesn't know if inflation is necessarily definitely transitory, and that we are a little surprised by this longer term possible inflation we're going to see. And people move their dot plots up a little bit, still ridiculously far out, meaning that, there's still a ridiculous amount of stimulus that I'm not seeing, you're not seeing. I don't know who's seeing it, but it's out there yet to come. I guess I'm seeing it, if I want to buy a car, buy a house, but besides that, that those are big to the economy. So I guess I shouldn't be discrediting those. Anyways, we saw oil has not moved down. Jim Cramer again said, the rig counts are going up. Oil's going to come down. It's not happening. Goldman now, or Bank of America, some reputable bank, is now saying possibly $100 a barrel by next year. I don't know what these rigs are, but they're not working. I don't know a single area of the economy that is not experiencing inflation. Does not seem transitory. Reality does not give us any indication of it being transitory. I have, that's hoopla. That's thin air talk. It's not real. Okay? It's not based in reality. If we look at history, we've talked about the Weimar Republic in multiple instances. Quickly, this instance of monetary policy resembles no other period in history more than the Weimar Republic, 1920s, 30s Germany, when the French and the Belgians invaded the German factories and mines, and the German government said, don't go to work, we'll pay our wages. There was a crisis, government pays the wages, exactly what's happening now, don't go to work, we'll pay your wages. It's still happening to this day. And then inflation occurred. And I'm not saying hyperinflation is going to occur to that level. I have no idea. Like Powell said, he has no idea. Nobody does. We have no blueprint. But this is the closest blueprint. If you look up on Google how long it takes for inflation to occur, you will see it's not instantly. It's, in some roughly 6 month to 2 year period, we see output issues occur. I don't think we saw, besides toilet paper, nothing crazy. And, closer to the end of last year, turn of this year, started hearing some things, started hearing some chatter. Now all of a sudden it's everywhere. If you got a place that is not experiencing inflation, please put it in the comments. I'm just curious. I can't think of anything off the top of my head, but pretty much everything else, inflation. So yes, that output side. Monetary side takes a year to multiple years. And just on time, in March, we started getting, in February, I believe, we started getting our hot reads. So that is just in time. Those are the facts. That's the reality. That is the textbook. Some website, it's on Google. You can go to, I'm sure, any other or many other economic textbooks and go to the section where they talk about the inflation lag. You will hear some variety of this. It's, soft science. I believe the economy is a machine to some extent, like Ray Dalio's beautiful video, How the Economic Machine Works. I suggest you go watch that if you haven't already. I rewatch that video multiple times regularly. Not like every day, but regularly. That's everything's happening as planned, on schedule. I'm not cueing into anybody's words too much. I'm cueing into the facts and reality. And I hope, you can cue into my words, but cue into the facts and the reality. And that's what I hope to be sharing with you and making clear in a way that you can understand. So that's the facts and reality. The portfolio is staying the same. No trades, really, micro things, like bought these silly wish options, saw some crazy activity there. Not saying to do that, but we'll see what happens with that. Very small allocation, only to big accounts. Energy is our biggest exposure, followed by other inflation and commodity assets. You heard Paul Tudor Jones. We are below where we were in terms of institutional ownership of commodity indices, below the 11 peak. So the previous crisis peak, we are below that by about 40%, I believe it was. And that was peak CPI at 3%. We're at 4.9, likely to continue increasing. So there's a lot of movement to go. Then all of a sudden Paul Tudor Jones brought up a fantastic point. Reddit traders, they run stuff up. What if they decide to run up inflation stuff? We saw what happened with silver in like a day. That happened a while ago, cooled off. But you saw what happened there. That was one day. So we will see what happens. But that's how we're playing things, sticking to the script. Inflation trades. And, we're never going to go away with our 5 to 10x tech until there are no more innovators left. But that is a smaller percentage of the portfolio now than it was last year. Ultimately, we are focusing on macroeconomic trends right now more than we typically do. It's like the main focus. Macroeconomic trends. And we are having a longer term time horizon than our typical relatively long-term time horizon. And it's focused on inflation because that's where I feel like the edge is, and I'm looking for the edge. So until next time, peace out.